Hey everybody, it is Thursday, May 9th, 2019. Taking a look at the S&P 500 as we get ready to trade whatever is going to happen tomorrow with the trade negotiations and the Uber IPO. Today we came into yet another down day. We've been going straight down for several days, pretty much. Although we did get a little bounce here, uh, on the second day after we made our current all-time high on May 1st, on the day of the Fed, 29.54.13. But for the most part, we've pretty much gone straight down. We have a 10-day simple moving average that is hooked over, and at the open tomorrow, it will cross down through this 20-day simple moving average. Sometimes when these crosses come at the end of a longer sell-off like this, they get treated as oversold conditions, and especially the 10 and the 20-day one can easily be sort of traded out. They could have put on a huge rally tomorrow, close back above the 10-day, and this would flatten out and it would be a one-day wonder of a cross. I think that is quite possible for tomorrow, just because everybody got so short and maybe everybody dumped so much stock going into this event at the end of the week here, that it's possible they might really squeeze them tomorrow. And if that's the case, what we're going to need to come in and see is this gap fill to Thursday's close, and then move on out here and get above 2,900. Basically, just keeping it simple like that. If we can move above 2,900, there's probably so many stops right here that are going to take us on through and have us, continue up here and maybe close above this 10 and 20-day simple moving average combo. It's also the end of the week, and maybe the market doesn't want to leave this kind of a bearish, basically shit all over the market like this and leave the chart in such a bearish way with closes underneath both the 10 and 20-day to end the week. Okay, so, and also today, when we came in and we flushed down here, we flushed down through the 50-day simple moving average, and we came down and we did not quite fill this gap in to the Q1 close. This was very important. I was saying that I thought that if we sold off, we would sell off about 100 points from our all-time high, and hold above this gap. Well, we dipped down into this gap and we reversed before filling it, which is important because I think if we come back again and we go back into this gap again, I don't think it's going to hold. I think we're going to break it and we're going to go on lower. So this was very bullish today to reverse out of this, to come back, retake the 50-day simple moving average. You can see here was the open for the day. We opened right on it, flushed down, came back, took back the open, and worked our way well into this gap. And our high for the day was just a couple points shy of filling the gap back to yesterday's close. So a pretty bullish turnaround, decent looking close, regaining the 50-day, so on and so forth. But here's the trick, that if we are going to see further downside, say what the plan is for tomorrow is to rally on up and get everybody recommitted long here, close back above this 10 and 20-day simple moving average combo, and then have negative stuff sort of develop over the weekend about what's going on with trade, and then come in and sell off again next week. And if that's the case, we would see, or if this is what's going to happen for tomorrow and we're not going to get this bullish move up higher, we're going to see a break of the 50-day simple moving average, and we're going to see this gap to the Q1 close here completely fill, and we're going to just break down further. And in breaking down further, we're probably going to literally double down the move that we've made from the all-time high to the break of the 50-day. And in doing that, we would double down here and we would land somewhere between the 200-day and the 100-day simple moving average. Now, I'm not saying this would happen all in one trading day. It certainly could. We've seen moves like that before, but it might be something that happens over the course of 2 or 3 sessions. Getting down to that measured move mark would get us down to 27.63 or so, 27.63.64. So a good 80 handle rule spot, about 190 points off of our all-time high. And, maybe what it would be a flush down that takes us down between the 200-day, excuse me, and the 100-day, and reverses out and leaves open these couple of gaps here that we left in our wake on the way up in the first quarter. Okay, so those are my ideas for where we would go to if there is another leg down, another shoe to drop. And I think this could even happen even if we trade back up here and back up to the 10-day simple moving average. But one more thing I want to point out, the whole reason that we're really thinking that we could trade back up here is that we have this unresolved level from the ES that happened around the time we made the all-time high. I think on the same day, it was May 1st before the market opened. ES printed an all-time high of 2961.25, and in session the S&P only got to 2954, and at the time there was maybe a 2-point spread, so this would be the equivalent of getting to ES 2956 or so. This level needs to be resolved in the light of day. That's why I've been sort of, talking about, taking on some 29.50 calls when they fall to the $5 window, because those will go to $11.25 at minimum. At minimum, if we go to 29.61.25 on a day that's 2 or 3 days before the expiration of those calls, they'll go much higher than that. Because you'll have all that premium. But even if it was on the very day of expiration, you would make at least this much money as the market rolls up and resolves this level. And I think if it gets up here and resolves this level and takes a look above it, maybe that's going to be our next, maybe this is going to sort of rhyme with that move down 200 points this next time to 27.63. So that would make a nice clean, maybe more like a 200-point drop. Everybody would love that. A lot of people would come in and buy this market if they got that kind of a juicy correction, I think. Anyway, hope this sort of caught you up on what I've been talking about in the tweets this week. Have a great rest of your evening. See you in the morning.